Okay, let's look at the global stock index for the week ending 18th of November, starting with the Dow Jones Industrial Average. Now, the Dow Jones has reached the short-term resistance line at 33,780. It haven't break through, so there's a high likelihood that it can actually will continue to rebound off the resistance line. Okay, now if it does that, then there's uh, the next few months it may be a move down towards the support line at 29,897. Uh, and if it does bounce off this support line, then there may be a, reverse head and shoulder forming, which would indicate potential bull market. But now, if it doesn't do that, then there's also a good chance that it might continue this bear market, and which proved that the last few weeks is actually a bear rally. Okay, let's look at then the Nasdaq Composite. Technology stock hasn't been doing well simply because the Fed is still going to continue the rate hike. Despite the market thinking that we are pretty near the end of the interest rate hike come January. So that means that in December there's going to be another round of rate hike, potentially with 50 basis points. So that's why you can see as far as the um, as far as this, although Dow Jones is seeing some kind of rally over there, but the Nasdaq doesn't have any strong rebound. Okay, so at this point in time, just hold on tight if anyone wants is thinking of doing anything with the technology stocks. Over to the S&P 500. Same thing there. Some financial institutes benefit from the increased interest rate. Some isn't. Nevertheless, after the previous week's strong uptick, okay, is taking a breather. So no clear direction down there. So, I would not suggest taking any new positions for the S&P 500. Okay, over to the Europe side. If we look at the CAC 40, hey, CAC 40 it broke through this short-term high over here at 6,590. Okay, but as you can see, there's no clear big volume over here. In fact, throughout this whole period, there's no strong volume to suggest that the big boys have come in um, to restore some of the position that they actually liquidated over the previous period over here. Okay, so um, anyone with the CAC 40 stocks, then I don't think that the chance of a strong rally is not there. Okay, now if anyone has actually taken the position in this week because of this breakout from this previous high, then do watch out for the putting in a tight stop loss eh, around this area over here at 6,370. Okay, for the FTSE, okay, you can see there's some strong movement in the past few weeks, okay, and then taking a rally and went up back again. Again, there's no big volume to push it, so I would hang on tight and just watch out for this support line, which is pretty strong over the years. Over to the Asian stocks, looking at the Hang Seng. Hang Seng has enjoyed some rebound. Okay, if we see over here, there's a rebound of the uh, force breakdown, okay, over the long-term support line, and then came back up. Okay, so over here is taking a breather over for this last week. Okay, so just hang on tight if anybody has bought something off the bottom over here. Just hang on tight to keep the stop loss at roughly about 16,000. Okay. For the Nikkei 225, despite um, the weakness in the yen, of course, recently there is a little bit of upward movement in yen because of the weakness in the US dollar index. Nevertheless, okay, check this out. This would be the resistance line at 28,400 and the support line at 25,795. Okay, as you can see, at this point in time, we are looking at a forming of the right shoulder of this head and shoulder. Okay. Now, given that it has bounced off the resistance line at 26,400, okay, if it continues, then now prepare for a breakdown below these 25,780 points. And if the source breaks down, that it confirms the head and shoulder pattern has been formed, and then we are seeing another round of sell off in the Nikkei 225. Okay, over to the Shanghai Stock Exchange. Okay, you can see that the long-term support line is still holding pretty well, although although recently there's a bit of uh, buying activity. Okay, we are seeing a little bit of weakness, probably because we are nearing the year end, where trading volume tends to be lighter, and also there's you know the property stock market, the property stocks with the good news coming out from Beijing, pushing up a little bit, but this rally didn't really hold too much, so um, no point to add into new position, in my opinion. As for the Kospi 200, the Korean stock market eh, is taking a little bit of breather over here, so watch for this resistance line around the 332. All right. If the best case is that it forms an inverse head and shoulder, and we suggest that we have a rally coming in. But with the global weaknesses in the stock market, I see that this this movement over here may be a case of a bear rally. Over to the last stock indices that we are looking at. the Straits Times Index. Okay, so 6 size index, it bounces off, so the previous head and shoulder pattern is no longer valid. So just watch out for a potential new one over here. So it's Straits Times Index is following the other uh, stock indices, and the- depending on how you look at it, it actually did a false breakdown, okay, and came back up, but watch out for another formation that might suggest that the bear rally is over, even for the Straits Times Index. So that's it for the week ending 18th of November.